All right, so let's start with this big story that's come in from Japan, where Japan's inflation outlook is becoming more uncertain as the conflict in the Gulf is pushing up global energy costs, and also a weaker yen is now making imports even more expensive. A government white paper says that Japanese companies are now passing on the higher costs faster than they did during the energy shock triggered by the Russia-Ukraine war in 2022. The report also says that inflation expectations amongst businesses and households are rising, reinforcing the Bank of Japan's view that price pressures could be becoming more entrenched after decades of deflation. While corporate investment remains strong, the government has warned that the impact of the Iran conflict on Japan's economy requires close monitoring. The fresh data highlights the growing divergence between consumer and producer prices, and Japan's core consumer inflation is still below the Bank of Japan's 2% target for the fifth straight month. However, producer prices have now climbed to about 7.1%, the fastest increase in more than 3 years, signaling mounting cost pressures for businesses. And economists say that companies have not yet fully passed those higher input costs on to the consumers, but rising fuel prices, expensive imports, and yen's weakness against the US dollar could push the consumer inflation higher in the coming months. The latest inflation data comes just ahead of Bank of Japan's policy meeting, where interest rates are widely expected to remain unchanged. However, the central bank is facing a difficult balancing act. The raising rates could also support the yen and reduce imported inflation by narrowing down the interest rate gap with other major economies. But tighter monetary policy could also increase borrowing costs for businesses and households at a time when energy and import bills are already rising. The Bank of Japan is closely watching whether wage growth now can keep pace with inflation in the country. And if wages fail to match the rising prices, then household purchasing power and consumer spending could weaken further, making the path to sustained economic growth that much more challenging.